Welcome back to the channel. A lot to unpack, a lot to talk about this week. Want to take an opportunity to go through some of our viewers and clients' questions when it comes to mortgage renewals, as this continues to be a hot topic in 2026 as millions of Canadians approach mortgage renewal. There's a lot of first-time home buyers that purchased their home in 2021 or 2022 that are now very apprehensive about what is to come at mortgage renewal, especially with all the news outlets covering these things like payment shocks and what clients should be paying attention to. So this week, I want to take an opportunity to discuss that and more all this week. Once again, thanks for stopping by. If you have not yet subscribed to the channel, please consider hitting that subscribe button, hitting the notification bell. It helps the YouTube algorithm. Once again, let us hear from you in the comment section below. Don't forget to drop your questions, concerns, and fears down there. And once again, if you want to stay up to date with what's happening for you and your mortgage in the Canadian landscape, it's important that you subscribe to the channel, like and share the video, but let's get right into it. So once again, this week we're focusing in on a lot of questions around mortgage renewals because that seems to be the hot topic. That seems to be the questions that we're getting more and more often. A lot of, questions about what to do during this whole process. So what I want to do is break it down into a few simple questions. Number one is, what is a mortgage renewal? Now, once again, these are questions geared to first-time home buyers. Maybe they're not familiar. Maybe they were never explained what happens at mortgage renewal because it's not automatic, right? It doesn't mean that just because you have a mortgage with a major bank, that automatically, when that mortgage renews in 5 or 3 years, whenever it happened, that you're automatically guaranteed the same rate or whatever the case is. Here in Canada, every term is basically you renegotiate your mortgage. And what that means is that the bank generally will, or your lender will generally send you out documentation at a bare minimum of 21 days before, sometimes a few months before. But if you fail to act on that mortgage renewal and don't send anything back to your lender, or you forget completely, maybe the mail is going to a different address, you need to make sure that you're on top of it. And once again, if you got that annual mortgage statement and maybe your mortgage is approaching renewal, you're not sure when it is, well, it's key to have that information and keep it handy, diarize it. Super, super important so you don't forget. Now, we'll talk about other questions about that in just a moment, but back to the renewal. Renewal is not automatic, so you do need to negotiate, reach out to your broker, reach out to your lender specifically, and find out what the process looks like for them. Sometimes they may automatically renew you into a 6-month close, meaning that you can't get out of that mortgage for 6 months without a penalty. Some will renew you into a fully open product at a significantly higher rate. So you do want to get ahead of that. And once again, that's if you have enough time. Generally 21 days before doesn't give you the opportunity to start shopping around. So if you did want to leave your lender, so what do? Is it beneficial to stay with your lender? Is it more cost effective to leave? Is really a question of how much time you have to shop around and what you're looking to do. Because remember, back in 2024, they changed the rules. If you're looking to do a straight renewal, right, you're not looking to change any of the major details of your mortgage in the sense of the amount, the amortization, right, how the back end of that mortgage. If you don't want to really make any material changes, we can switch you to a different lender. And basically, you don't have to undergo the stress test, right? So this is super important. Now, for most lenders, this is the case for most federally regulated banks. Ultimately, there are some outliers there, but for the most part, if you're looking to just transfer over to a different bank for a better rate, you can do that without having to undergo the stress test. But it's super important to understand is that there are sometimes costs when you leave your lender, such as a discharge fee. There might be some other additional costs like appraisals and legals or internal closing costs, which are super important to transfer that mortgage over. However, most of the major banks, some of the lenders are either offering you a couple things, either with the opening of an account for that mortgage payment to be taken out of that new lender's account. They may offer you cash back, depending on the size of the mortgage. They may offer you a reimbursement for actually transferring the mortgage over. So there's no real hard cost paid by you, right? Now, of course, there are some lenders that don't offer those things, but most of the major banks, if you're working with a broker bank or a broker friendly bank or a broker themselves, they can point you in the right direction on what is best because ultimately you might be able to save a little bit more, but you also are at that point right now that because you are able to switch to a different bank or look at all your options, your mortgage requirements over the last couple of years may have changed, right? Maybe you didn't get a line of credit. Maybe you didn't want one at the time, but you want one now, right? Maybe the lender that you're with doesn't offer you a line of credit. And now that's something that you need or want from your mortgage product. So you want to reach out, have that conversation well before those particular mortgage documents get out to you for renewal. Now, once again, should you be expecting a higher rate? Just a few weeks ago, we talked about this. I mean, ultimately, really quickly in a nutshell, a lot of clients are asking what we should be looking at. If you received a mortgage back 5 years ago, chances are your interest rate was super low and you're going to see a bump up in your payment. If you took on a 3-year product back in 2023 and you're renewing in 2026, most likely you were in a higher rate at that particular point, and now you're going to be in a slightly lower rate. So you might be putting some money in your pocket. Once again, depending on when you selected, when you got that mortgage, depending on the term, you may see an up or down in your payment. But once again, there are options if you're talking with a mortgage professional who understands mortgages and help you. They can point you in the right direction of what you could do based on your finances and your financial situation. Now, really, the question is, when should I start looking for a mortgage, right? Especially if you got the mortgage renewal, you have to be very cautious. It's not an early renewal, because if it's too early, right, you're not able to really lock anything in with another lender. Let's say you want to leave the lender that you're with, you won't be able to do that. You can renegotiate with the existing lender within 6 months, but you're not able to leave. Now, why is this important? Well, think about it this way. If you did take a mortgage out 5 years ago and your rate is, let's say, 2% or better, would you want to really renew 4 or 5 months early with a rate that starts with a 4 in front of it or even a high 3? I mean, that's really not something that you want to do. You don't want to leave money on the table. So you have to be able to distinguish between that's an early renewal or a actual renewal with a certain window of opportunity, right? And then we're getting a lot of clients that reach out and say, hey, and I got the documentation in the mail. And I remember the clients, or I look at the file, I go back and I'm like, hey, we closed this like in October, November, right? And they're reaching out to you now, right? Just trying to lock you in a little bit early, get you out of the lower rate into the higher rate. And once again, some people fall for it. I mean, not to say that the banks are trying to be conniving or malicious, right? They're just sending it out to try to keep some of that business. And once again, a lot of banks are trying to compete for the same business. So if you're not working with a mortgage broker, they can shop it around and make sure that you're getting the best advantage. Well, then you might be leaving money on the table. Now, the last couple of things I just want to talk about really, really quickly is the fixed and the variable conversation, because that is super important when it comes to renewal. And ultimately, right now, it's a very tough question to answer. We've talked about it at great length on the channel. I mean, there's potential for the Bank of Canada, I should say this in quotations, to potentially raise rates in 2027 if inflation continues to run, or will run eventually, right? That's really the key. Now, we have to understand a lot of variables, like we talked about the Bank of Canada video we just did last week. I mean, there's a new Fed chair coming in. Is that Fed chair going to be bullish or hawkish? Are they going to cut rates in the US? What is that going to do to Canada? Ultimately, what's going to happen in the bonds? So ultimately, looking at that fixed and variable opportunity really comes down to your finances and understanding your income structure. Once again, when you're thinking about renewal, think about what's going to happen in the next 3 to 5 years. If you're planning to sell in the next little while, you may not want to take something longer than 3 years. If you are in a smaller mortgage and you can stomach the risk or the analysis of the sensitivity to that interest rate, I should say, right? If the Bank of Canada raises or cuts by 0.25% or 0.5%, right? I mean, looking at your finances, if that's going to move the needle for you, then you may not want to go variable. Once again, each case is specific. Variable rate mortgages are always a 3-month interest penalty to get out of with most major banks. Of course, there's certain conditions that apply depending on the lender, but most fixed rate mortgages, or if not all fixed rate mortgages, are interest rate differential. And I mean that in the sense that if you get into a 5-year fixed and you want to break in the second or third year, depending on the size of that mortgage, it could be significant. Now, once again, if you're looking at all these numbers and you want to get a better understanding of if it should make sense to refinance or what my payments could look like, in the description box below, link to our free app, download it, play around with those tools. They're pretty helpful, even if you're looking to go out there and buy. All the calculators and all the tools are there for you. Now, last and not least, when it comes to these questions about mortgage renewals, we talked about the fees, we talked about the renewal options, we've talked about potentially, looking at your window of opportunity, making sure that you don't leave it to the last minute. That's the key. But most importantly is overall, the best advice I give is what do you do when you're looking at the down the barrel of your mortgage renewal, especially if you're uncertain, you bought the house, or maybe you're underwater with the equity because you buy with less than 20% down, right? At the end of the day, there's always a solution there. Most banks have said if you act with that mortgage renewal, they will honor that mortgage. You can sign it back and repeat the process for another 3 to 5 years. But once again, for a lot of clients that maybe had lost their job, maybe their income, they can't qualify, even if they wanted to switch to a different lender. There's no equity and appraisal that may be required. You have to understand all the subtle nuances here, as the banks are going to go through the process to always validate income and employment. And even if you are switching from lender A to lender B and you're renewing the mortgage with the exact same terms, right? We always require either an automated appraisal internally through the lender or a physical appraisal. So these things are super important to understand, especially if you're thinking about refinancing. Even for you, there are cases where some of the clients have said over the last little while, just to sort of, talk a little bit about it. I think it's super important because we've got these questions. It's not ready for every Canadian, but for Canadians that have variable rate mortgages, more important over the last 5 years, right? So if you did have a variable rate mortgage, and depending on the lender, if you're with a lender that moved or an adjustable rate mortgage where that payment would have gone up or down, you really don't have much to worry about. You've already bared the brunt of it because your payments had already gone up and come back down when the Bank of Canada hiked and lowered. But for those Canadians who had a trigger rate mortgage, especially if they had investment property, some clients are telling me that the bank never contacted them, right? They never made any changes to their payments. That trigger rate was triggered and their payments literally had all gone towards interest. And then they just tacked it on to the principal and they kept on tacking it on, tacking it on. And once again, even though the rates had dropped, right, some of these balances on these mortgages were significantly higher, which is causing some problems. And sometimes it may or may not report to the credit bureau. And the only way that a lot of these people understood that, especially for those that maybe weren't in tune. Not to say that every Canadian is. I'm very active with my mortgage. Obviously, I'm online. I'm checking things on a regular basis. Some people are not so much so. And they got their annual mortgage statement, or they're getting their annual mortgage statement. They're questioning what's going on there. So once again, it's super important now that you have the annual mortgage statement. There's a lot of details on there. Don't throw it out. Keep it handy. Review it. Understand it. If you have questions, talk to your bank. Talk to your broker. Don't leave things unassumed. Like don't assume that things are always good, especially if you have questions about that mortgage. So we'll leave the video here. Wishing everyone a wonderful day. Don't forget to subscribe to the channel. If you have questions, send them in the comment section below. But we'll see you all next week.